last week was a great one. We're looking forward to even better this week. All right, let's get it. Let's get it. All right. Good morning, evening, something, everybody. My name is Israel. Welcome to Israel Keys Wealth Academy. Welcome to a Monday evening pre-week analysis session. All right, let's get my chart up on the screen. By the way, if you didn't get on the, was it Saturday morning post-week analysis, so it's one of the things that I would recommend to any trader, at least on a weekly basis, and really you should be doing this every day. And if you're a scalper, pretty much every session, but at least on a pre-week basis, on a weekly basis, you want to be trading all your entries, your exits, your trades, your wins, your losses, the times where you decided not to take a trade and it worked out in that the trade would have lost, or you lost a chance to make some money. You want to review all of this on at least a weekly basis. Why? First of all, it reinforces your learning. It forces you to take stock of why you did the things that you did. The second thing or reason is it tracks your progress. You should be actually making notes of this. You should have a training journal. I'm going to talk about that in a video coming out very soon. The Traders podcast is coming back starting from this week. So I'm going to have the 5th edition of the Traders podcast, almost 5 years since the last one. But beyond that is it helps you stay connected as to where you are in the markets. One of the quickest ways to not be profitable, or one of the ways that ensures you're not profitable as a trader, is if you jump in trades in and out without following the story that the market is telling, right? Whatever pair you're on, whatever currency, whatever asset, Bitcoin, gold, wheat, oil, futures, NASDAQ, whatever it is you're trading, the market's telling the story. And if you forget where you were, for instance, last week or yesterday, when you get back into the markets today, it means all the analysis you did is wasted. If I spend an hour in the markets analyzing today, I come back in tomorrow, if I don't make reference to what I analyzed today, then I've wasted my time. And so you can go into the next week, the next day, the next session with a full understanding of where you were before, what your hypotheses were, what you're trying to accomplish, where you're looking for liquidity opportunities, entries, exits. If you're already in the trade, where you should, manage your trade, take off some profit, tighten your stop loss, trail it, all these things. So saying this is what I did today or this week or this session is immensely important before you jump into the next one. So if you watch the post week analysis session, then a lot of the stuff you see on your screen now should make sense. I took 4 trades last week on this account. It started off, and yes, let me make this, I forgot to put my disclaimer on the screen. Everything I'm talking about and teaching is for purely educational purposes. I'm not giving you investment advice. I am to cover my back from legal exposure. I will always put a demo account. I may show you a live account every now and again if I want, but I don't even want to take that risk. Everything I do on a live account, I will mirror on a demo. So I'll only ever be putting a demo up on screen so that no one sues me for giving them a legal advice that may not work out the way they want it to work out. You will lose in trading. All trading carries risk. Trading on margin carries risk. You can lose more than you put in. Use your brain. We're not giving signals out live online. We're giving you analysis and a way to look at the markets. You have to do the work yourself. Amen. Do the work yourself. All right. So I took 4 trades last week on this account. I started off the account at $50,000 and then I upsized it to 75 because I'm planning to start to trade futures and I want to take on a certain size of contract on the futures market when I do start trading futures. I'm going to start trading futures either this week or next week. For those of you who don't know, who are new here, Israel Keys Academy started out about 7 years ago now. I have traded since the year 2007. My first 7 years were horrible. I lost 35,000 pounds in total, including 25,000 pounds, not dollars, pounds. And at the time, it was roughly $1 or a pound to $2 in one day. Literally in one day, I saw my entire life savings crash. Why? Because I would just jump in the market and I say, I like this and I like that. I think it's going to go up. And the worst thing that can happen when you're trading wrongly is that you make money initially. The best thing that can happen to you if you don't know what you're doing in the markets is that you lose. I pray for you. If you're a new trader, my prayer for you, if you are just doing absolute rubbish, is that you lose, and you lose early with small money. The worst thing that can happen is that you go on a lucky streak and think you know what you're doing and get just about dangerous enough to destroy your financial future. And that's what happened to me. I spent 4 hours on that floor that day thinking about my life or the life I no longer had. I took about a year off in trauma, came back, and then actually learned how to trade, so I thought. Trend lines, tops, bottoms, Bollinger Bands, MACDs, stochastics, RSIs, you name it, breakout, what else? Breakout and retest, supply or demand, head and shoulders patterns. That was me. And I was batting roughly 50% because when you do that, you're pretty much just, well, you're better than gambling. When you understand those things, you are better than gambling because now you've put yourself in a position to win 50% of the time. The problem with winning close to 50% of the time is if you don't understand risk management, you don't understand money management, you don't have good trading psychology and mentality, your wins will be far less than your losses. I once put on 2 trades. I was supposed to lose $50 each. And by the time I was done on those 2 trades, I'd lost $1,000 because I kept moving my stop loss because I was so sure that it was going to turn around. But guess what? It eventually turned around after stopping me out for $1,000. $1,000 down in my account. And then went on to somewhere where it would have made me about $3,500 eventually. And of course, the market's out to get me. Someone's behind the screen. True. The market's out to get you, but not because it hates you, because the people who move the markets, what we call the market makers, and really actually some of the stuff that we taught and understood is really not really correct. The market makers don't move markets. The big institutions do. When we say market maker, we use it loosely in trading circles to talk about everybody who's not retail. But the market maker really is there to make a market, to introduce buyers and sellers. The people who move the market are central banks, institutional funds, big, large hedge funds, people who trade in essence to move the market significantly in Forex. In stocks and shares, it's different. And this is another problem. People bringing their stocks and shares experience into Forex. It doesn't work the same. Stocks and shares, the NASDAQ, I think, trades roughly about, I can't remember the exact figure, but back in the day, it was about $1 trillion, or no, it was about $700 million a day. The Forex market trades over $5 trillion, and this was as of 20 years ago. I haven't checked the new information. And so to make a dent in the market, you literally need to be trading somewhere in the region of at least 25 to 50 million in a trade. In essence, you need to be putting in at least 25 to 50 million in one single trade to actually move the market by a couple of pips on your own. And there's people who trade, who put 500 million, 10 billion, 25 billion. They're the ones who control how markets move. Your little $5,000 account is not just a drop in the ocean. My little $75,000 account is a speck of dust. And the best way to trade is to figure out how they operate and make sure you are the flea on an elephant's back, not the flea flying in the opposite direction and smashing into the elephant. It will not even know you were there. And because they need liquidity, by the way, I got a student in the room, Joe. So when you want to trade with your, I don't know, $5,000 account, you click the buy or sell button and instantly you're in a trade. If somebody wants to trade 50 million, they can't do that because there might not be enough liquidity at that price for them. So they need to engineer price to a place where they know there will be liquidity. Meaning, if I want to buy, someone has to sell. If I want to sell, someone has to buy. So if I have a huge amount of money to dump in the market, first of all, even if I find liquidity at that point, if I dump it in one go, it will move the market against me. If I have 50 million to sell, by the time my first million goes through, the market will go further down, meaning I'm selling at a far worse price than I should have. It's called a market for a reason. Think about it like going to the supermarket. You want to buy something for a cheaper price and sell it for a higher price. Or, listen, or make an agreement to sell it at a higher price and then go and find someone to buy it from at a lower price and then take back to the person you agreed. That's how it works. And so they are incentivized to move price to points and levels and times where they will find the opposite. So if a market maker wants to buy, he needs someone to sell. How does he get someone to sell? If you put in a buy order, a buy trade, your stop loss is going to be a sell, right? If you buy, you get out the trade by selling. If you sell, you get out by buying. And so if you put a buy trade on and they want to buy, they're incentivized for you to lose that trade. Because if they take price to your stop loss, automatically you are forced to sell. When you then sell, they then buy at the lower price, and then they go where they want to go. And you're pointing at your screen and swearing and cussing and huffing and puffing. It's not their fault. They're not wicked. They just need to do their job. That's the only way they can trade. And so we have to figure out how they move and get in sync with them. This entire website is for free on how to do that. I've had professional traders write me in secret and say, your stuff, I use your stuff in my mentorship or in my training. I've had people tell me your free stuff on your website is 10 times better than some of the stuff I paid $5,000, $10,000 for. I'm not boasting, I'm just saying take advantage of the opportunity. All right? Okay, so 4 trades last week. They're all on the chart. Let's dig into them. I did this very quickly. So first trade was on Wednesday. I showed how I got it. It's in the video. Basically, the video before this on my channel was on Saturday doing the post-week session. How the rationale is there. That was a winner. Then I took 2 trades pretty much at the same time on basically took 1 trade and split into 2 for 2 different exits at the same time on Thursday. On Friday, last week was my first time placing a trade in the market in almost 5 years. I put on my Telegram group with some of the students I used to have and a couple of new ones, some other traders who are not necessarily my students but want to be part of my training community, and say, be careful about news, Joe. And then what exactly did I do? I then did not be careful about news. But notice that stop hunt was triggered by the high impact news on Friday for the dollar, and then look at what happens. So today would have been the day that I quote unquote won that trade. So this is good feedback for me. I can look at this in one of 2 ways. The first way I can look at it is that I won 4 trades, but my execution lost me the 4th. But that's not a good way to look at it. The good way to look at it is I lost the trade, and I didn't just lose the roughly $1,000 that I lost. I lost that $1,000 plus about $3,000 in profit. So I actually lost $4,000, Joe, because I disobeyed my own rule. And if you're in my Telegram channel, You can let the world know if I'm lying. I did put it on the channel in the morning. Be careful with your entries today because of news. So was the answer not to trade? No, it wasn't not to trade, because look, on Thursday, when I did trade the same pair, this is where my stop was, right? And so the safest thing to have done on Friday was to put my stop above Thursday's high. Joe, can you see that? And I would have been fine. Well, if you're going to watch it there, we might as well, so I can make eye contact with you. That's fine. So, but I was trying to be greedy. I was trying to go for a smaller, a tighter entry. And this was the entry I was going for, this fair value gap right here. I actually extended it, my zone down here. And so I took this trade here on the way out of the gap. Actually, poor. Now that I look at it, it wasn't just the news. My entry was actually horrible, because I should have been waiting for a clear displacement coming out of that fair value gap. And if you notice, that clear displacement did not come until this candle here. This candle here should have been my entry. So if I put where I should have got into the trade here, and put, now that this had spiked, I would definitely now have put my stop loss there anyway, right? I would have been collecting a cool 321 today. So that's good feedback. You can lose for nothing, or you can learn while you lose. That's very good feedback for me. And as a returning trader who's been out the markets for years, you'd expect some rust. And yeah, I wanted to break my laptop on Friday, but I'm okay now. All right, so let's look at what I'm looking at this week, or what I think I'm going to be looking at this week. Also, I usually don't trade Mondays and Fridays, because they're usually manipulation and accumulation days. However, because there was a move that did not finish, the news, this is very unlikely. Usually after news, there is a sharp movement to one side. But as you can see, the news took price into a tight consolidation, which is a sign. Remember our rule, our tenet here, CMERT. Price always moves from consolidation to manipulation to expansion. Consolidation, manipulation, expansion. And the RT is you then get a retracement from the expansion before it goes to target. So every time on your chart, on any time frame, legs of price begin when you start to see accumulation or consolidation, where price goes into a tight range. The fact that Friday was a tight range here, there's a move that hasn't finished. Our signature pattern, right? An intra-week stop hunt, followed by market structure break. So price took out Thursday's high and then broke structure to the downside. So if we were trading today, I wasn't, and I don't care that I missed this move, because you're not going to make you're not going to get every single move in the market. You're just not. So if you have FOMO every time you miss a trade, this is not the business for you. You have to this is how you trade. You agree what you're going to trade with yourself. You can't trade I see people sitting down doing analysis for 4 hours. They check every single currency pair, all the majors, all the minors, all the exotics. Then they check all the indices. Then they check all the commodities. Then they check all the futures. I'm like, are you your first question when you know what, let's put this up on the screen. Let me put this up on the screen. Right. Your first question when you trade, let me help you out. Hopefully. All right, insert text. is you ask yourself, number one, what will I trade? You limit yourself, in my opinion, in every single week, you should not be tracking more than 5 assets. And that's even if you're a full-time trader. That's if you can sit there in front of the charts all day. If you have a job, a business, anything else, 3. You go into the week and tell yourself, between maximum 5, and sometimes you can go in with just 1. As I'll show you in a second, what will I trade? The second thing you have to settle for yourself is, when will I trade? Right? When will I trade? You can't be in front of the screen your whole life. And even if you can, that's a horrible way to live life. One of the reasons why many of us get into trading is we want to stop swapping time for money. And we want to start swapping money for time. We want to have more free time to do the things we love to do. I'll give you an example. Let me tell you how I got back into trading. I've been thinking about it all year. All year. I'm a Christian. I've been praying about it. I had a dream about it. Right, Joe? But the trigger was, somebody gave me a job to do. I do some jobs from time to time where, I just do some stuff, make a few pennies, pounds, put a turkey on the table. And it was going to mean that for the next 2 weeks or so, I was going to have to spend at least 2 hours a day working and my effective hour rate was silly. I'm not going to tell you what it was, but it was silly. And I said to myself, why will I spend 2 hours a day earning this when I could earn it in 1/10 of a trade? And so I said, you know what? I'm not doing this job anymore. Wrapped it up and said, there you go. And I'm like, God, I hear you. Pulled out my charts again. So don't give the market your life. And listen, there's a threshold. Before that threshold, the more time you spend assessing the markets, right? The better, or analyzing, the more time you spend staring at the screen, the better you'll be. But there's a point of diminishing returns. At some point, the more time you spend looking at the market, the worse you become. Because you will start seeing patterns that don't exist eventually. You start seeing things that are not there. Your brain will start playing tricks on you. So the first thing you need to settle is what you will trade. The second is when you will trade. The third is how you will trade. Now, how includes many things. It includes, what time frame you're going to trade. Now, I have 3 accounts, right? 3 accounts. One is for scalping, one is for midterm trading, one is for swing trading. And I take different entries on each. And so when I'm on this account, I'm asking myself, how will I trade? What time frame? What strategy? What entry patterns? What stop loss management system, right? You need to settle all this before you open a chart, literally before you open a chart. So, on this account, the one you're looking at right now, I'm an intra-week trader. Let me show you. Right. On this one here, I'm a scalper. I'm going to show you the scalping account in a second. And then on the third, I'm an end of day. Oh, I think I just logged back into the exact same one. I'm an end of day trader. So this is a scalping account. There you go. So you see, there are far more trades during the week on this one. Okay, what's going on with my mouse? Okay, there you go. So because it's a scalping account, all right. More now. Again, same currency. Now profit and loss is 124 because the account size is 1,000 on this one. So I made 12% for the week. Again, because I stupid trade. Actually, no, I actually lost 2 trades on this one. And one of the trades I lost was actually because I forgot I was on my scalping account. I'll show you in a second. And I took an intra-week trade on a scalping account. Again, these are things you should not be doing. You know, these are errors you should not be making. What screen were we on just now? What screen were we on just now? What screen was I writing on just now? I can't find it. Anyway, I can't find. Is it US 30? No, I wasn't on US 30. Anyway, that's fine. So what, when, how? That's fine. Anyway, so this is the scalping account, right? I took 1, 2, 3, 4, 5, 6, 7, 8, 9 trades. I lost 2. No, okay, I lost more than. No, I lost 2. I broke even on 1, right? And then I have a third account. That is a swing trading account. Joe, I only enter that account once a day. When the day closes, when the candle, the D1 candle for that day closes, right? I go in and I take a trade. And so, whenever I'm in front of each one, I know exactly what I'm doing and why I'm doing it. All right? Okay, so let me get off the soapbox. Let's get into the week. Let's see. Why is this account not loading? I just want to show you that basically I've only ever taken 1 trade on this particular account and I'm still in the trade because it's a day candle trade. All right, so something's freezing. I just need to wait for my MetaTrader to unfreeze before I carry on. Okay, I know what's going on. Give me a second. Okay, we're back. Really apologize for that, guys. For some reason, there's a bug between my laptop and MT4 that every time I forgot about that, and every time I try to change accounts on MT4, it literally just throws me out and then affects not just the stream, but my actual system. So I need to figure out what that's about. I probably will just do it on my Windows partition moving forwards, the streams. Okay, anyway, let's get back to it. Apologize for that. So that's the trade. Joe, come take a look. So I'm on the same trade, on the same, there we go. So that's it. And this is an end of day trade. So I don't care about all this. Now, my stop loss is all the way down there on the 4-hour chart. So if I close this trade today, I would have had about $4,000, $5,000 thereabouts. But that's not what I'm going for. All right. Okay. So let's get to analyzing, shall we? I think we've done enough. So remember the question, what will I trade? How will I trade? When will I trade? We're going to answer those questions today. So I have 5 assets that I'm looking at this week. 5. There's 5 things that I potentially could trade this week. It doesn't mean I'll trade all of them. And in fact, I don't intend, or should I say expect, to get an entry or to get in on more than 2 of them. So I'm going to give you my trade watch list. You know what? Let's do it this way. Let me do this in real time to show you how I would do it. So I would open up. I actually would do this on my. For me, I would do this on my thingy-bobby. In my literal trading journal. Joe, that's my trading journal. Take a look. But for the purpose of the screen, I'll just open up a Microsoft Word document and then we'll go. So, okay. What do you think? Don't go too far. Don't go too far. All right. So